Welcome back, traders. It's your boy Snipe. Today we're going to be talking about the closing price. I'm going to be directly quoting Paul Tudor Jones and Stacey Burke in this video. So I'm just going to start off with this quote from Paul Tudor Jones. Always think of your entry point as last night's close. And the reason why is because this gives you a reference point to where traders are potentially trapped below or above the closing price, or if the market is filling orders for a possible trend continuation or a reversal. And I'm going to be directly quoting Stacey Burke in these next few minutes, starting with, is the previous day's high or low of the day level breached? Is the previous day's high acting as support or resistance for a trend or a reversal? Are we trading around closing price? Trading off of or into a closing price? Is closing price acting as a ceiling on day 2 after day 1 shorts, which means we'll get day 1 shorts, the breakout pullback, and the closing price will act as a level of resistance for a continuation? Is closing price acting as support or a floor after day 3 shorts, which means we'll get 3 days of shorts and the closing price will act as support or a floor for a reversal? Closing price prior from yesterday acting as support or resistance on day 2 or day 3, which means not only yesterday's closing price, but the day before yesterday. If you draw that level across, is that a major level of support or resistance on the day and session you're trading? 930 pin hammer at closing price level. So does New York open at the closing price with a pin hammer? If so, that is your trade. It can be that simple. Coming into the new day, did New York put in a peak formation high or peak formation low? On day 2, the closing price may be in the middle of the range, which means the high and the low are the relevant areas, and the closing price is 50% of the range, which means the closing price could be a 50% level. No need to put fibs on your chart. And even if you did put a fib on your chart, I'm just going to use this as example. The previous day's high and lows are reference point. And just one sec. The closing price is trading relatively around that 50% level. On day 3, if you are long or short from the close, they will not give a free lunch, which means there will be a stop hunt into traders that are long from the close and possibly continue lower without letting traders close with a profit. Highest, lowest close of the previous week or month can act as support or resistance or a magnet. Forgot to mention that closing price could also be a magnet for a target if you are trading from the high or low of the day. Highest, lowest close of the month or week can act as support or resistance or a magnet. Do we have 3 higher closes from the high low of the week that can offer a best trade setup for a trend or reversal? Or do we have 2 higher or lower closes from the high low of the week that can offer great first red day or first green day opportunities? Now, all of that I was directly quoting Stacey Burke. 9:30 open and the close of a session could be significant levels to form a thesis on a trade setup. 9:30 open can pump or dump into the closing price for a trend or a reversal. So we're just going to go over a few chart examples, starting with oil. And this is a trade that I did execute. We have our Monday, which gives us our high and our low, right? So this is our opening range. We have yesterday's New York session giving us a peak formation high and a peak formation low. We now have a rectangle within a rectangle. Coming into the new day, they hit the stops on higher level longs. This is a 1, 2, 3 engulfment for a possible long opportunity back to the closing price. Remember, closing price is a magnet for a target level if you're trading from the high or the low of the day. Now we have a high bull engulfment prior to the New York session, and we have a 1, 2, 3 stop hunt. Once again, if you don't know what that is, watch my previous videos. We have an engulfment 845, which was my entry. Why is this my entry? Because I'm getting a fill relatively close to the closing price for a move to the low of the day, which this was a successful trade, easy money, low stress, and it can just literally be this simple. Use yesterday's closing price to develop your trading thesis for either a trade off of the closing price or a trade back into the closing price. Next chart. So we have the Nasdaq, and this trade was also taken by a member of my community. Link in the description. Also, before I continue, I have my own indicator. There's been quite a few questions on, hey, what's the indicator you're using? Okay, well, I have my own indicator. If you join my Discord and go to the indicators tab section, you will be able to access this indicator. It has the session timing windows, the daily, weekly, and monthly open. If you are using futures charts on TradingView, the closing price will not work. You're going to have to use the open price. Now, if you're using a regular CFD chart, we have the daily close, weekly, and monthly closing price. We also have the previous days, weeks, and monthly levels. And the major round numbers is customizable depending on if you want to trade a $10 box or a $100 box, depending on the pair that you are trading. So back to what I was saying. We have the Nasdaq. We have our opening range Monday. And on our Tuesday, we have a prior day's closing price acting as a floor. Not a coincidence. Let me take these numbers off the chart really briefly. So we have our opening range of the day, which is the Asian session. We have our initial balance, which is the London session. And they're dumping into the closing price. 9:30. Stop hunts into the low of the day. 9:45. An entry right at the closing price. Or you could have even had a limit order with a 1-bar stop at the closing price. Whatever. Either or, this is a easy money setup. 25 pip stop max for a move back to the high of the day. Once again, I had one of my members go live and execute this trade perfectly. So once again, is closing price pumping or dumping into the closing price for a potential best trade setup? We had an inside day on Monday, which is a signal day for the next day for a false break reversal or a breakout pullback continuation. What are the three things markets do? Breakout, pullback, and trend. Breakout, fail, and reverse, or stay in a trading range. On to the next chart. We have the UK 100. We have an interesting chart here. This is a New York to New York template. New York pump for a New York dump. But as you can see, prior day, we had an engulfment at 8:30, 8:45, pin hammer right at the closing price for a move back to the high of the day. Easy money. But on the day, we have our pump. We have our high bull engulfment. We have our lower lows on the inside. Our stop hunt back into the peak formation. And coming into the New York session, we have the engulfment right off of the closing price for a move back down to the low of the day. This is easy money, everyone. If you miss the trade from the top, you're going to execute this trade from the counter trend bars, which I will have a later video on explaining what I mean. But wait for a counter trend bar. Wait for the break of that counter trend bar and execute your trade. This is still enough space for low-hanging fruit to grab some potential profits and call it a day. Next chart. We have the US 30, and in this example, the closing price was a level of, the closing price was a magnet. So in the London session, we did get a trade set up from the closing price. Once again, Paul Tudor Jones. Always think of your entry point as last night's close. What does this do? This gives you a reference point for you to know, are traders trapped above the closing price? Are traders trapped below the closing price? Or are they going to use that level to trade off of? This is not a secret. It's not magic. It's not anything you think it is. Simplicity is key. I almost ranted there for a sec, but we have a high bull engulfment. Once again, we have our stop hunt back into the peak formation. For our fast move back to the low of the day, we have price dumping into the low of the day. We have our low bear engulfment. 9:30 opens up, hits both sides on the 1 minute chart. Higher high on the inside, dump and pump back to the closing price, which was a magnet for a target on this trade. Peak formation high, peak formation low. They worked the high for the move down. And in the US session, they worked the low for the move back up. This trade setup was also executed by one of the members, or shall I say, one of the experts in my community. Once again, the link is in the description. He executed this trade perfectly. Beautiful setup, easy money. Trading can be simple or it can be complicated. You choose.